What is up, guys? What's up, flippers? It's Marcel here. Here I am with a quick markup, sorry, not markup, but recap video on GBP USD about the trades I executed today. So I executed a loss, and that loss was executed in the live trading webinar. Then I'm still currently in a winning position, and I just booked 30% of the partials recently, and this one is still running. My next partial is at 15 risk-reward ratio. So we'll see how this trade will end up. So let's just begin this whole video on the 15-minute time frame. You know, I just broke down everything on the 15-minute time frame in the live session, in the live trading webinar. But I would just give you a small context on what has happened and what was the thought progress behind the trade and the trades. So, you know, on GBP USD, we were reacting on a 15-minute area, and this 15-minute area was just above the 4-hour one right here. So price was reacting on this 15-minute area several times, then it changed the character, broke the structure here to the upside, formed a demand chain over and over again. It was forming a demand chain. You know, there was small internal breakout structures over and over and again here. So price just broke the structure over and over again and reacted on demand zones over and over again after the breaks. So usually these reactions happened on the extreme areas. So yeah, if you take a look at the structure, you would say that it's kind of looking like bullish, right? But if you switch to the 4-hour time frame, you can see that literally the 4-hour time frame has been ranging for like 10 candles. Starting from this candle, price was just in a big range, printing equal candles next to each other in this one single range. So basically, trading in this range is really not high probability. I wouldn't say that it's low probability to trade in this range, because we are still in a fractally comfort situation where the 4-hour time frame is bullish. We reverse back down to a higher time frame area, 15-minute change character here, 1-minute change character, and we are heading to the upside. But we are slowly heading to the upside. So basically on here on the 15-minute time frame, currently there's no direction. But if you take a look at the higher time frame, we are still leading to the upside, right? We are still having a bullish direction. So I wouldn't say that trading here in this range, let me just move it. So I wouldn't say that trading here in this range is a low probability setup. I wouldn't say that it's a high probability setup. I would call it a medium probability setup. But I just explained this in the live trading webinar too. And basically the first trade that we executed, that loss, was a short trade. And I pointed out so many times that if you are not sure about this trade, then don't execute it. And if you are not in a good amount of profit in this month, then don't execute it, because that is a low probability, not low, sorry, that is a medium probability setup. And it has a chance to sweep you out from the trade. It has a chance to fail. But if you're in a good amount of profit in this month so far, and you have a higher, or if you have a higher risk tolerance, you can execute that setup. Actually, not many of you guys executed it. Only like 4 or 5 of you executed it. So yeah, I was pretty happy about it that not many of you guys were willing to execute it. Actually, I did set a limit order there because I'm up in a really nice amount of profit in this month, and I had literally nothing to lose besides that 0.5% of my capital size. But you know, that means nothing because the risk to reward was much higher for me. But let's see the trade idea. So basically here was the 15-minute supply that has caused this nice, inefficient, and less recent leg to the upside. And basically this was the supply that broke the structure here, mitigated this demand, and had liquidity below it, nice amount of liquidity here, right? So the supply has been mitigated here with this movement. After a mitigation, price just went back down to mitigate the demand. So basically this is a sign for a range, because price is bouncing in between demand, supplies, demand, supplies, demand, supplies, and it's bouncing in between supplies and demand on the 15-minute time frame. So if you see something like this, you know, you will know that it's a range, right? Obviously, if you take a look at this time frame of this chart, it's a clear range. But price left equal taps here inside or even above this supply, which has been swept out by this movement. So this wick swept out this liquidity, then it aggressively reversed to the downside and changed the character here. So what was the thought progress behind this trade? It was pretty easy, because in the range, as I created a video about it recently, because on the range, how can we trade? We can trade in between 15-minute supplies and demands, right? So that was the original thought of this trade, the thought progress of this trade. So price just swept the liquidity from above this supply, meaning it will reverse down to a demand. What is the next demand where we can expect a reaction and a continuation to the upside? Here is this demand where we could expect a continuation. What else has happened here? Price changed character on the 15-minute time frame after sweeping out these double taps, aggressively. Change of character has happened from this supply, to be more precise. Change of character, and it failed to mitigate this demand. Left liquidity here above this demand, so there was liquidity to target. Here was this 50-minute supply region, and after the mitigation of this supply, we could look for shorts, right? Why? What is the original thought progress here? Simply because we are in a range, we are trading in between supply, 50-minute supply and demand areas. Higher time frame, higher liquidity has been swept out. The upper side of the liquidity, sorry for the mistakes. So the upper side of the liquidity has been swept out. Price reversed to the downside with the change of character, left a nice zone behind. If it's getting confirmed, then we can trade down next to the next demand, targeting the next 50-minute demand region. If it's getting mitigated and getting confirmed, we can target some higher price section. We can target some higher liquidity line or some higher supply level. All right, so that was the original thought progress of this trade. Switching to the 1 minute time frame, you will see it much clearly that here is that supply that I was talking about. That is the 50-minute supply that changed the character here to the downside. There was liquidity below it, so you can identify nice amount of liquidity here, nice amount of liquidity, actually double taps right here, double taps right here. So this liquidity has been swept into this area, right? All of this liquidity has been swept into this area. And price even swept some liquidity from above the region, but on the 5-minute time frame and the 50-minute time frame, these candles did not close above the zone. It closed inside of the area, meaning it swept the liquidity from above the region, and the strong reversal has happened after the sweep. So you can see this nice, really strong reversal to the downside that has been caused by the sweep of the liquidity here and the sweep of the liquidity basically here, meaning we could wait for a trade opportunity here. Actually, this 1 minute refinement is a 5-minute zone also, which we originally used. Here it is, the 5-minute area that we originally used. This is the base of the thought progress on this trade. Switching back. So this was a 5-minute area which changed the character on the 5-minute time frame and changed the character on several places on the 1 minute time frame, right? So which character was changed on several places. Then price mitigated it right before the session opened, half an hour before the session opened, and left a sell trap inside of it. Here's a perfect sell trap. This sell trap has been swept into the 5-minute zone. I said I'm not going to enter here on this 1 minute refinement directly. I was waiting for a confirmation. That's what I said in the live session. And the reason I was waiting for confirmation of this area was because this zone was formed 2 minutes before the lunchtime, but it wasn't formed in the New York kill zone area, and I don't really like to take risk entries on those zones which are not formed in the New York kill zone. So I just wanted to confirm it. I just wanted to double confirm it. Confirmation has happened because after sweeping out this liquidity, price mitigated this zone and changed the character aggressively to the downside, right? On several places, change of character has happened again. So it was almost a clean line that price will sweep this amount of liquidity here into the demand, and it will react on the supply, and we will have a nice trade leading down to that demand. That was the original target point that I showed you in the 50-minute time frame. So let me just remove this. This is confusing. We had 3 zones. First one was up here. This is an extreme area. We had the decisional here, and we had another decisional here. So basically, this first decisional was because of the change of character that has reacted here. Price reacted here on this less recent demand region, then created a rejection. And from this supply, price has flipped this area, flipped this demand, leaving a flip zone behind, which is this supply. After this one, price just continued down, created a small stop candle in the market that basically flipped this area, flipped this weak demand. But price was so aggressively approaching this zone that I didn't really set a limit order here, and neither of the guys did set a limit order here, so we were safe from this trade. It went down, then it came back immediately with this 1 candle push. So it was a huge push. So I said that risk split is an option, so you can set a limit order here and here. But price was so aggressively approaching your area that we didn't even have time to set a risk split order here and here. So I just simply used used an order here. And right after I saw this candle, which just simply pushed in like 2 seconds into the area, I just said that, okay, this trade is going to hit stop loss immediately. I knew that it's going to hit stop loss. I just entered here. And actually, that's what has happened. It did hit my stop loss. I entered here with 2.5 stop loss. And yeah, I've been swept out from the trade. But actually, I don't really care because this trade had 10 criteria, had high and nice confluences to hit TP. I found the downside of the trade, which actually caused the stop loss here. I will explain it after the criteria tracking. So the first criteria obviously was the higher time frame mitigation. So price mitigated the higher time frame area here and here also. 50-minute zone mitigation and 5-minute zone mitigation were, happened. Both of the areas were confirmed. So yeah, second is inefficiency. Here's inefficiency for the entry POI. Third is liquidation, sell trap, perfect liquidation for the higher time frame zone. Fourth is pro-trend, pro-order flow. Basically, since the 50-minute change the character and the 5-minute change character and the 1-minute change character, we could say that it was pro-order flow, but we were in a range, so we can't really use these criteria for a range. But yeah, 50-minute, 5-minute, 1-minute was bearish. Were bearish. So I will say it was the fourth criteria. So the fifth criteria was a change of character here, obviously, and the flip also. Sixth criteria was a full mitigation of the area. Seventh criteria was a V-shape reaction, coming up, mitigating this 1-minute zone and V-shapely reacting on it immediately. Eighth criteria, price wasn't coming from unmitigated opposite-sided zone here. Ninth criteria was a liquidity to target, as I showed you. Here was a liquidity to target, LTT. 9 criteria. 10 criteria was basically the strong pro corrective pullback, and I showed it in the live session that price is really creating these strong bearish movements and correctively approaching these supply areas and creating nice inefficient movements after the supply reaches. Then it's again correctively reaching a supply. So we did count the 10 criteria as the corrective pullback strong pro, and there was no combined liquidation for this zone. Maybe we could count the decision as the combined liquidation, but I will just leave it at 10 criteria. So it was a 10 criteria trade, 10 criteria loss. I'm completely fine with this trade. And the reason the reason that the trade failed because of is that this is pretty likely that price swept the liquidity here. So you can see like 1, 2, 3, 4, 5 equal touches of these bottoms, and price swept it out. And after this amount of liquidity sweep, it reversed aggressively. So maybe this is the mistake that has caused the failure of this supply. Otherwise, it would have been worked perfectly without this liquidity sweep. But since price swept out so much amount of liquidity, it just simply reversed strongly and swept out the supply areas because this liquidity sweep was stronger than the orders resting on these supplies. So yeah, here's the first trade, minus 0.5% of my capital. Who cares? We are traders. Losses will come. And here is the next trade. Here's the next trade. Right after this loss, price just simply continued to the upside. I first originally was expecting a trade on this 5-minute demand here. I said that if price reverses back down to this demand, we will have a nice confirmational scenario, but price kept breaking the structure to the upside, broke the structural high point from this 50-minute demand region. I will show it on the 50-minute time frame too. So price just broke that high point, this high point, and also this high point with the body closure. So this high point, this supply, and this high point was either broken from this 50-minute demand that you can see here. It also created inefficiency in between the top of the first candle and the bottom of the third candle. So that was a perfect demand area that has caused, once again, this break of this supply with the body closure, the break of this high point with the body closure, and the break of this high point with the body closure. So the long idea that I took, and I'm still in this trade, came from this thought progress that if price can react on this freshly formed 50-minute area, then we will have a nice confirmational scenario to the upside. Or if price can't react on this, then we will still expect the confirmation here on the 5-minute demand below it. So basically, price came up to this high point where it formed double tops. Perfect double tops has been formed. Then after it went back down to mitigate this demand, but first it swept out this liquidity. That was a really nice liquidity trend line. If you pay attention to this one, you will see that perfect amount of liquidity has been swept into this 50-minute zone. After the sweep of this liquidity, price just simply changed the character here to the upside. After the character changing movement, it left liquidity for the entry. That was inefficiency too that has started from the extreme area right here. And this was the only area, this was the only region that has started the change of character movement here. There was liquidity for it. So I did settlement order on the 50% of this candle. That was an exact tag. I was tagged in the trade. And actually, I just arrived back home at like this movement. So I arrived back home at 4:30, 4:35 p.m. And yeah, I just analyzed the chart pretty quickly and I saw this opportunity and I was like, okay, I'm going to take this. Sorry, I got a phone call. Sorry, I'm back. So yeah, I was like, okay, I just realized this. Here was a 50-minute zone reaction, price change corrector aggressively with a V-shaped reaction after a 50% mitigation. Liquidity was swept into the area. There's liquidity for this entry POI too. Basically, this was an 11 criteria trade. So I had to take it. So I just immediately did set a limit order. And when I did set a limit order, I was somewhere, I mean, price was somewhere around here or here. So yeah, a few minutes after it just tagged me in and went up to my partial point at 7.5 risk-reward ratio. This is 7.5 risk-reward ratio. I partialed out on the double taps because I didn't know that price will continue after the sweep to the upside or if it just simply reverse down. So I took 30% of the whole position at this liquidity line at 7.5 risk-reward ratio. I'm planning to take 30% off, I mean 60% off of the whole position right here at 15 risk-reward ratio, and I'm targeting the double taps on the higher time frame here for 35 risk-reward ratio as my final target point. So yeah, basically this compensated for the loss. It even brought back more, so it's like a 2% profit so far on my complete account size, or 3%. I don't know. I will check it. I can send the metaphor screenshot if you want me to. I can show everything. So yeah, basically that's the whole idea behind these trades. And yeah, let's just quickly count the criteria. So here was a higher time frame zone mitigation, first criteria. Second criteria, liquidation. Liquidity has been swept into the higher time frame zone. Third criteria, perfect inefficiency starting from the entry POI. Fourth criteria, still don't know if it's a pro trend, counter trend, because we are still in our range. But yeah, price just changed back the character on the 15-minute time frame, starting from this 15-minute area. 1 minute fractally confirmed the 15-minute area, basically with a change of character, with a body closure even. So yeah, I would call this as the 4 criteria. I'm giving it a pro trend, pro order flow criteria. Fifth one was a change of character here, obviously. Sixth one was a 50% mitigation of the higher time frame zone. Seventh one was a V-shaped reaction on this higher time frame zone. Price was coming down, coming up immediately with a V-shape. It's an obvious V-shape. Eighth one, that price wasn't coming from unmitigated opposite sided higher time frame zone here at this region. Ninth one was basically, I'm not going to give it the strong pro corrective pullback because we have at this region, we didn't really have strong pro and corrective pullback movements. Longs and shorts were equal. So that is a missing criteria. So 9 criteria is the come by liquidation here for the entry POI. And the 10th criteria was the liquidity to target here. And of course, on the higher time frame, liquidity too. So not 11th, 10th criteria. So yeah, these are the criteria for this trade. This is the thought progress behind both of the trades. Hope it was helpful for you. And cheers, guys.